Hello and welcome to CMU Oral Space Forest Elections. We thank God for a successful week. In fact, for the last week, the recent week, for a bullish week, right? We did our analysis and then we anticipated that DXY was going to be bullish for the whole week. And thank God, whatever analysis we did actually played out successfully, right? We anticipated that the DXY was going to go up. And then lo and behold, if we had followed closely, we realized that actually DXY was bullish. So first of all, we thank you for sticking with us, being patient, and then being very cooperative with us. Last week, we did the analysis, we did a top-down analysis for DXY, and then it's just a small on the gold, right? Because we said for CMG, at CMG, the analysis that we do typically is on DXY, because DXY controls any other pairs in it, right? So we did that, and then this is how the market went. So we will do a short recap on what actually happened, right? I did the analysis and I told you the previous week, in fact, the day before, I was already in a trade, right? And then I was expecting that the markets, in fact, DXY will go up, and it did. So we are going to do a recap. So if you want to check and actually believe whatever we did, you can go back to the previous week, week 1. And this is week 2, right, in 2024, right? So this is where we began our analysis, right? You can see 43rd stroke first week initial setup, right? The date was, let's check. The date was what? 23rd December 2023, right? And I said because the week overlapped with the 2024, I just brought some slashes there, right? So that means 43rd and then stroke first week in January in 2024, right? So this is what happened. And I told you I was in a trade, and then at the point that we did the analysis, actually, this was the price level. You see this blue line? This blue line, this is where the price was before doing the analysis. If you remember, you can check the one video. There's no point for us to lie or deceive you here. So this is where the price level was. And then I told you I was expecting price to move up to at least this resistance level, right? If you look here, we have resistance, and then at that time that I was doing the analysis, it was actually a resistance, right? And we are saying that at least if DXY does not move at all, it will move to this point, right? When it gets to this point, it's either it's going to pull back a bit and then zoom up again, or it will get to that level and continue. That was what we said. And then lo and behold, actually price got there and then moved past that level. So the resistance was broken. Now, when resistance was broken, I was still in trade, right? I was still in the trade. I was monitoring. So, and I told you also that even though we do the general analysis, the forecast for the week, as the days go by, what we do? We do some adjustments. The adjustment doesn't mean the point of view or whatever, the direction is going to change entirely. But we have to do some modification, draw our lines, our trend lines, and all that. If you remember, that was what we said. So actually, price got to this level, consolidated a bit. So anytime there's a consolidation, it means that I am not in the trade. That is what I do. Okay, my studies, that's what I do, right? So when price keeps consolidating, it means that I am not in the trade at that moment. Many a time, it's not all the time, but many a time, I'm not in the trade. So when it got here, price consolidated for a bit. So I exited and I waited for the market decide if it's still going to what, continue with the uptrend. So that was what happened. So when it got there, it did actually move up. The price will also broke that consolidation level and then move up to this level, right? So in our last week or the recent week analysis, I said price is either going to move here, move back a bit, and then continue. And then at least when it gets to this level, it could what? Move back or continue again. But the highest level that I actually did was this level. So if you see this line is actually what? A resistance level. So I was expecting that price of DXY should move to the highest level of the resistance level that I want. I believe. Yes, that was it. So this is the first resistance. It was broken. And then this is the second resistance. The price actually also moved to that level. Now on Friday, price, in fact, I think Thursday, price moved to this level, right? I think Wednesday rather, price moved to this level. Then it moved back, it started what? Pulling back. So pulling back, I exited the market, right? And I had to have another perspective of the market, right? Now that we are at the resistance level, price could actually reverse. When we say reverse, that means changing price, changing direction totally, right? That's reversal. And then when you see a pullback means that the price is just going to move back a bit, and then what? Continue moving back up to the initial direction. That is what it means. So we have a pullback and we have a reversal. Reversal means you change direction totally. And then the pullback will move back a bit and then go back to the normal direction. So now, if you realize, last week when we were doing the analysis, this trend line was not in it, was not drawn, right? This trend line was not drawn. So in the course of the week, I had another perspective. I told you that as the market prices move up and down, you can have another perspective, another view of the market. So I realized that the market was giving me a particular pattern, a particular structure, right? So I was able to draw a trend line. In fact, a support trend line. You can have a resistance trend line. But this is the support because the line was drawn below the prices of DXY. So that was what? A support trend line. So I was able to draw. And then lo and behold, I realized that yes, there was a uniform what? Line that could actually be drawn. So I drew it and I realized that, oh, good. So that means there was what? More probability, higher probability of what? DXY continuing to move up. So I drew the line. Now, look at this. There's another spike here, a bearish candlestick spike here. Now, this had no effect. It had no effect on the market, right? There's something we call a glitch. So if you realize, if on your DXY, on your trading view, actually, if you have DXY put on your trading view, right, you may realize that you may not have this kind of spike here, right? I woke up, I think midnight, I think on Thursday or Wednesday, and I realized that there has been this spike. So when I saw this spike, I was very frightened, right? I'm a human being. Even though I've done my psychology and all that, I was very frightened because I was in the trade expecting that DXY should continue going up. So I woke up around midnight and I saw this. I was very alarmed. So I had to verify with my colleagues from SDFX, right? I have a group that we all learn, do analysis. So I went back and asked my colleagues, and they told me this is not on their chart, right? Because even before asking them, I checked the price levels on this subsequent or correspondent pairs, right? And I didn't see any effect there. So I realized it was just a glitch. So this line had no effect on the chart, right? Because on DXY, you have, on TradingView, you could have different brokers. So I think the broker that I chose DXY from had a glitch there. So that was the reason. So if you realize, you may not find this, but if you find this, it means that you and I chose DXY from the same broker onto our DXY. So that was what happened. So now when we got here too, I realized price at what was retracing. So at this moment, I think when price was actually moving, retracing at this point, I was in the trade. and that was very bad for me, right? But because of my trading style, my trading plan, I didn't exit because I have drawn this resistance, sorry, this support level, that the trend line. I've drawn it, and I realized when price gets there, it might what move up, right? And then besides that, beside this the trend line, I also saw my 50 EMA, right? So the 50 EMA means that when price gets there, it's either it will bounce back or move below. So if it gets there and it doesn't move below, then that means my setup or my analysis is very good. So I waited, right? And then I had another confluence. Another confluence was this bullish FVG, that's fair value gap. I think the ICT people use this very often. It's a term accustomed to them, right? So that's what they use. So sometimes you have to go some terms, and then you analyze and you study. If it works, then that is good. So that is what we call fair value gap. And this fair value gap is actually a bullish one, right? A bullish one. I'm expecting it to move up because this candle here is a bullish one, right? So during my fair value gap, right, I realized that this fair value gap was going to meet the 50 EMA and at the same time my trend line. So you see, in trading or in analysis, in analyzing, what we do, we look at what we call confluence. Confluence, right? So confluence means you are looking at a number of factors that actually adhere to each other. There's an agreement, a unanimous agreement. So when this happens, that means you have a firm grip that price is going to move the direction that you anticipated. There's a higher probability, right? So when I did that, I realized that good. That means my setup is going to play out. It's going to be a good one. So I waited. Meanwhile, I was in the trade, and at that moment, the trade was going against me, right? I was in a loss. When I started as an amateur, when such things happen, out of fear and panic, I'll exit the market. Then later I realized that the market will come back to move in the direction, right? I think for amateur and intermediate, you get to a level that you become confident with this. You trade without fear. So I waited because of this confluence. One, the bullish fair value gap, the price is getting to my 50 EMA, right? And also getting to my support trend line. So when you got there, lo and behold, there's a fourth factor that I looked at. Now look at this candlestick. Look at this red, and green. If you look at red and red, this red, the bearish two candlesticks, and then the green coming, there's a candlestick pattern that we call a morning star, right? A morning star is a bullish candlestick pattern, right? So when this informed, then I had another fourth confluence. That's good. Price will go up, and then lo and behold, it happened. So look at this. So as we are learning, you realize that you work with confluence factors coming together. You don't decide on one factor and then enter the market if the market is going to go up or down, right? So this is what I did. So lo and behold, price got there, right? Prices got there, and then what happened? Boom, it moved up again. So you realize, you see what happened. So it moved up to this level, and this is my resistance level. So when it got here, now there was a fundamental news. We call it economic events, right? So with time, you also understand if you are an expert, if you are already a trader, you have learned trading for a long time, you know what is the fundamental analysis and all that. You do technical and fundamental, right? So the fundamental, there was a news that was the recent week. We had NFP news, non-farm payrolls. If you want to know more about it, you can Google it up or even search YouTube, and then you know what it is. It's a high impact news. When it happens, crazy things happens in the market. So now, per my trading style, right? If you want to choose me as your mentor, this is what you have to do. So before any massive news, it's not all the news that I exit the market, but before any massive news like non-farm payrolls and then FOMC news, normally I have to exit the market and then let the market do it. That's its own thing. Then after that, I have the opportunity to enter the market again, right? So that's what I do, right? So when it got to that news, if you see this rectangular box that I've done here, when price got there, you see there was kind of prices rallying around the resistance level. Now, if we have learned from our previous videos, the beginners and the intermediate, when prices get to the resistance level, there are two things that can happen, right? Either it will break that level, or the price will be resisted, right? Meaning that the price could what move below as in begin to what dip, or it will break that level and then begin to buy, right? And that moment too, when it happened, then NFP was what around the corner. So what I did was to exit the market. Now, when I exit the market, I realized at the news, price moved up, and I was a bit disappointed. I was a bit disappointed because in my analysis, sometimes I can do fundamental analysis and I do technical analysis, right? But basically, I'm a price action trader, right? But we just use the fundamentals to support as to when maybe you have to leave the market, even though your TP has not gotten to that level or SI has not gotten to that level, but you have to leave the market because you think the market is very shaky. So that's what it is. So when it got to that level, before the news, I think 20 minutes to the news, that's what I do. 20 minutes to the news, I leave the market. So when it got there, I saw that the price was what selling a bit. So I left the market. When I left the market, boom, the news came, then DXY began to what? To buy. So I was disappointed because in my fundamental, I realized that price was what? Was going to what? Sell. Listen, fundamental analysis, I looked at the data and I realized DXY was going to sell, right? But when I looked at my the charts or the technical analysis was also telling me a different thing. Sometimes there can be this confusion. Bear with me. So I realized price action wise, market was going to what? Continue what? Buying, but the fundamental was actually what? Telling me price what? Would dip. But at the news, the price what? Moved up. So I was telling myself, oh, if I had still stayed in the market for a bit, I would have what? Gotten to my TPs and I got some extra money. That was the disappointing. But lo and behold, within 1 hour, look at this kind of stick. Within 1 hour, price moved up and then came back again to the same level. Then what happened again? The price started dipping. So you see the disappointment. Even though it was a disappointment, at the same time, it was a good thing for me. Because if I had stayed in the market thinking DXY was going to continue buying, by the time I came back again, I went out after the news. I went out to do some heads out. I have a personal thing that I do. I don't have to stay behind the PC for a long time. So I went back. I came back again and I realized DXY has started dipping again. So just imagine if I was still in the trade thinking DXY was going to continue buying, but then whatever I had made within that period would have been what? Been lost. So you see, so sometimes this is what we have to do. We have to be disciplined, right? We have to be disciplined. Forget about greediness. You don't have to be greedy. Follow your trading plans. Every trader have to have that. You have to have you have to have a trading plan, right? You have your trading style. If you don't have this, you find it difficult to what actually become profitable in this profession. So that is the recap for last week, right? So this week we are going to look what is going to happen, right? So this week, let me show the price level so that at least next week when it comes and we are doing analysis, we know where the price is, right? So that is it. So this is the price level. This is the price level, right? So let me even put the date there. The date. A minute. I'm going to copy this and then so in the same way for this week, we are going to do a top-down analysis, right? We're going to do a top-down analysis for what we are expecting this week, about the week coming. I'm recording this video on Sunday, 7th January 2024. Right, so that is it. Sorry. That is 7. 7 January. So now this 2023 should be gone. So that is it. Right? So this is the price level. So I'm putting the price here, the date here, and then we do the analysis. So for this week, right, we have to do top-down analysis. Last week I just added, I made it the days, the daily time frame, the 4 hour and the 1 hour, right? Now we are going to look at we are going to add the weekly time frame to it, right? And then see something. In fact, this week is going to be a bit indecisive as in where the price will move, right? I'm just giving you a general idea. The market is going to be very indecisive. What does it mean? It means that price could be moving, not before the price could actually choose a direction to move. It will actually take time. It will be moving up and down, kind of rallying, consolidating. So you have to be patient. Don't rush into what taking trades, else you might lose. And for me, according to my trading plan, I usually don't trade on Mondays, right? I usually don't trade on Mondays, especially when I don't have any trade running over the weekend. If I have trade run over the weekend, let's say on Friday, I still have some trade in them, then I will leave the markets to what? Continue. I'll leave my trade to continue, because what happens on Sundays to Monday is that the direction of the prices of the market, in fact, continue to move for about 1 hour, I think at most 1 hour, maybe 2 hours. Then later I realize that the market will change direction totally. So that's what happens. That is according to my bias. You may have a different perspective. There's no problem with that, right? So this is what I've studied in this market. So if I don't exit the market, then I'll leave it, because the price may continue for some time, and then later I will change direction. But if I'm not in any trade over the weekend, what I do is I don't even trade on Mondays from the morning up until 4 p.m. So around 4 p.m., I may decide to enter the market because of what? My general overview of the week analysis, right? So whatever analysis I do on the week, over the week, right, for the week, I wait for it to have a confirmation, right? So if you're an analyst, when you do your analysis, don't rush. You have to wait for things that we call confluence. Wait for them to actually what? Play out. When they signal you positively, then you what? You can zoom in. So actually for me, I'm a conservative trader, right? In general, I'm a conservative trader. I don't rush into the market. I wait to have a clear setup, clear probability before I enter the market. So this is what is going to happen this week. So please be vigilant. So even the analysis that I'm going to give you today, I'm going to do the analysis. Yet on Monday, I'm not going to enter the trade. I'll wait for confirmation. So if I be your analyst, is going to wait for a clear setup, for a confirmation before I enter the market, how much more you someone who is just following me, a mentee, right? So you have to wait. Then when you see whatever we have done, then you can continue. So that's what's going to happen. So let's move to the weekly time frame, and let's see what is happening there. So we are going to do top-down analysis. If there's an agreement between the two, right, then we can what? We can decide. So now, if you look at the weekly time frame, look at what is happening. In the weekly time frame, in the higher time frame, I'm just going to look at the first three candlesticks to do my analysis. That's what I do. I don't waste my time looking at the pattern or the whole structure. I look at the last three candlesticks to decide. So if you look at this weekly time frame, we have what? A bullish morning star forming. We have the red again, and then the green. So you realize that there's a bullish morning star forming here. A bullish morning star means the price is going to go up. So that's what I've seen here. Now let's move up to the daily time frame. Right? Now, if you look at the daily time frame, look at what is happening. The daily time frame is also, sorry, my diagram looks a bit, I'm going to try and zoom in and then so that I can have a look at the candlesticks, what is actually happening, right? So now, if you look at this, look at the daily time frame, you see that the last three candlesticks, we have a bullish candlestick. We have also a bullish, even though the candle looks what? Red, right? It's a bearish candlestick, but it's a bullish. Looking at what? Candlestick anatomy, right? This is what? A pin bar, a hammer one, it looks bullish. But when you look at the last one looks quite what? Even though it's bullish, it looks like what? Doji candlestick pattern. Doji candlestick means that the prices, the close and opening of the prices are around the same place, right? Around the same point. That's what happens. The close and open prices looks similar. They looks as if they are closing around the same place. That's a doji, right? We have, in fact, for doji, we have different types of doji candlesticks. I don't have time to explain this. If you want to have more knowledge on this, check the playlist and you know candlestick patterns. You learn them, right? And then that is it. So this is a doji, and doji candlestick. What you learn is that it's an indecisive what candlestick pattern. What happens is that if you see them at a resistance level, there's a higher probability that price will move down. That's doji candlestick. When you see them at a resistance level, it means that price has a probability of moving the opposite direction, meaning price will dip. But if you see them at the support level, it means that price has a higher probability of moving up. So that's what it means. And now at the point that we are, we see a doji candlestick forming at the resistance level, right? You see that at the resistance level. So if you look at the weekly time frame, the weekly time frame looks bullish. But when it comes here, it looks what? Bearish, even though the candlestick is bullish. But this is happening at the resistance level. So anything at all could happen. Either it will break the level, the resistance level. This is the resistance level. You see this line. See, prices have been rejected here a number of times. Prices have been rejected here a number of times. When it got here, it even got rejected. Even this point, it didn't even get to that level. You understand? But here, it moved past and then it has come back to below, to close below, but still around what? The resistance level. So anything is bound to happen. So you see, so now we are having some disagreement between the daily time frame and then the weekly time frame. So let's move down to the 4-week time frame, the 4-hour time frame. So let's see what is happening there. So, right, let's see what is happening here. Now, when you look at the 4-hour time frame too, there's something like a morning star trying to form at the what? The resistance level, right? Now, at this place, it looks like a resistance, and at the same time, it's what? It's a support level. I will explain to you for that confusion. How can it be that we have a support and a resistance level being around the same point, right? But before that, look at this candlestick, three candlestick forming. This looks like a morning star, right? If you don't know what's a morning star, I'm not going to explain it. Go to the videos and go and check in the beginners. I think the intermediate playlist. Check that. We have a red candlestick here. We have a green, and then what is formed here looks like it's also a bullish candlestick, right? Now, for a morning star to happen, the third one should close just above the middle of the first candlestick. Now, when you measure, if you put your measuring tool here, you realize that this is more than half of this. This green is closing just above half of this candlestick. So it doesn't look too promising, right? Now, besides that, you see this resistance level. Sorry, this trend line. This trend line was actually what? A support. But now this price has broken below it. So the fact that this price has broken below it, it makes it what? A resistance now, a resistance trend line, because price has broken below it. This way has broken below it. Prices at the moment is below that trend resistance line. Now, the second factor is that look at this 50 EMA. This 50 EMA too, prices is what? Below it. But at the same time, prices is around the 50 EMA. Means that anything is possible. Anything can happen. Either it will broke above or it will continue to what? Stay price continue what to stay below the what? That 50 EMA. So you see the reason why I was saying that the market is going to be quite indecisive, right? If you start Monday and the price broke or breaks up just above it, then that means you are going to continue with in a bullish DXY week for the second week. But after Monday or so Monday, within Monday, we see that price is still rallying below that resistance trend line, and at the same time the 50 EMA, then you should know that price is going to what? The market structure for DXY has changed. The character has changed. Now we are going to what? Enjoy DXY selling. So if you realize this week, I am not being certain on whether the DXY is going to buy or is going to sell. But we will have to wait at the end of Monday, or yes, at the end of Monday, at the end of Monday, and then we see what is going to happen. So we are waiting from the morning till the end of Monday to see if price is going to move up or stay below it. So don't rush into making decision, into what? Buying or selling. So please be vigilant, be careful. I'm doing this so that you will not think my analysis is wrong. In fact, in this profession, no one will have analysis to play out 100%. But for the first week, thank God it worked out, right? We had 100% blast. It went well, right? So that is it. But we do that with caution, right? With conservative attitude, right? Because you can make a lot within some few minutes and then lose them within some few minutes. So why don't you try to keep or save whatever you have had? Keep it for a long time instead of just losing them. Because in this profession, making is very difficult, but losing is very easy. So don't be throwing out your money to the market back. Don't do that. So that is it. So that is what I'm telling you for this week, right? So if you are lucky, just at the opening on Monday or even Sunday, market will just move up. And then, bam, you are in. So that's why I was saying that price is around support and at the same time around resistance level. So price being around the resistance level can do anything there. At the support level, you can do anything there. It depends on what the market players, the buyers and sellers, they will have to decide with their massive input of what? Funds. So that is it. So realize that the weekly was bullish, the daily was indecisive, and then the 4 hour too is quite indecisive, even though it looks bullish, but it's quite indecisive. Now let's move to the 1 hour because I trade the 1 hour time frame, right? I trade the 1 hour time frame. So that is what will be our final decision to what to make. Now look at what happened here. If you look at the 1 hour, price has totally what broken what the support level. Price has totally broken the support trend line. It has broken it. At the same time, it has broken the 50 EMA. It has broken it, right? And then after breaking it, see what is happening. Price is reversing back to that level again. You understand? Price is reversing to that level again, right? You see. But normally when price, there's something we call retesting. Price retesting the support or the resistance level. So realize that price has broken the support level for the confluence. It has broken the support trend line. It has also broken the 50 EMA line, right? But after breaking it, it has come back to the 50 EMA again. Now getting back, let's see what will happen. Will it cross over or it will just be a retesting factor? Retesting is to hit there and then come back again. You see, so this could be one thing, or better still, price could get here as we are here, and then it what break it above. So that is what I am expecting, or we should be expecting for this week, right? This is what we should be expecting for this week. Anything is bound to happen. So please be careful, be vigilant, be awake, and be checking what is going to happen. Right? Now, if you are going to look at, some people may not be having that the skill to be checking between the 1 hour, 2 hour, 4 hour D and then the W, right? So if you are studying 1 hour time frame, right? If you are trading 1 hour time frame and you want to study only 1 hour time frame, then I will suggest to you that what you have to do is what? Wait for price to come back to this level, right? If price breaks, if price break below this, you see this line, check this line. If price breaks below this, then price is going to continue moving down for DX1 on 1 hour time frame. So that's what I'm telling you, right? So bear in mind, and then you can trade. So this is the weekly analysis, the market forecast for the second week in 2024. So I wish you a happy week, a happy trading week. If you have any problem or any question, any queries, any help, please get back to us. Check our page description. Please like and subscribe, and then forward any grievances or any problem that you have, and then we get back to you. Now, I think let me have just a small analysis on gold, right? That will be the, I think, yes. And I'll do a small analysis on oil too. So let's see. Now, on gold, these were my trade for the recent week. So if you realize, it means that this week I really enjoyed on gold. I was hitting what TP. This 1, 2, 3, and 4. It's a double entry here. So 1, 2, 3, 4, 5, and then even 6. So you see, you understand. So I quite enjoyed a bit. That is it. I was very patient, checking my things, checking my setup. I wasn't rushing. So that is it. So with gold, I told you that for the USD pairs, mostly for the currencies, by month, mostly for the currencies, the DXY is let's say you have a pair with something like XXX stroke USD. XXX, when you say XXX, it means that any currency there coming first before the USD. So if it is XXX USD and USD is buying, then the opposite will happen in that pair. So if USD DXY is buying, then XXX stroke USD will be selling. There is the same thing, the vice versa for the other what pairing. So that's what's going to happen. But normally for the commodities and other indices, it can be quite a slight difference there. So for them, you have to be very patient and see the clear movement or massive move in DXY. Then you can follow that analogy that you have just said. And then looking at US oil too. I don't trade US oil on all my accounts, right? I don't trade it on all my accounts. I trade on some certain accounts, right? So now I'm going to tell you straight ahead. I'm not going to do any analysis. I've done that already, and because of that, I don't want the video to be lengthy. So for this, the oil, please expect a bullish what's the name? A bullish oil, a bullish week, I should say, right? At the moment, I'm still in this trade. You see this trade? I'm still in this trade because you see that this trend line, price has broken it and then has come to retest it to give me a higher confidence, a higher probability. So I entered here. So this is where I am now in profit at the moment, right? But the market has power over every trader. So even though I've told you this, you just have to be what? Cautious and trade as we move in the week. So thank you very much for watching. See you at the end of this week or next week. Stay blessed. Bye.